And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We're here to speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you got any questions or comments, feel free to email me at Aaron, Aaron, at lighthouse with an L, lighthousecapital.co.il. That's Aaron, lighthousecapital.co.il. You can check me out on the web. That is at www.aaronkatzman.com. That's www.aaronkatzman.com. Be sure to follow me both on Twitter and on LinkedIn, and subscribe to our brand new YouTube channel. So I want to speak to you today about change. Okay? I'm not a big fan of change. People who know me know I don't really like change. I like sort of old-fashioned. I want to show you something behind me. Let's just see. You see that? That's a new office chair. If you pay attention to previous videos, you'll see an office chair that doesn't have a black covering on it. Why is that? Well, because over many, many years, that covering got worn off and it's turned gray, very, very gray. Who knows? But underneath the black is actually gray. You learn something new every day on the show. So I don't like change, whether it's office furniture, whether it's, just, I like routine. I like being dependable, depending on certain things. I don't like change. What can I tell you? Why do I bring this up? Who cares? Well, earlier this week, I had a meeting with a lady who lost her father. She lost her mother years ago, but she lost her father. And it was, why do I bring it up? Because it's such a common issue that we went through, and I really wanted to speak about it. What is the issue? It's what happens when you receive an inheritance. Okay. This lady actually inherited a bunch of brokerage accounts that she had from her father. And what he did is we went through the accounts. We looked at all of the positions. And some of them had big losses. Some of them, were bought 30 years ago. There was one account that was not really relevant to her. She was in her late 30s. And this was an account which was just created to spit out income for her father, who wasn't able to work and needed supplementary income. I don't want to go into all the details, but you get where we're going with this. So we sat down. Now, it was a portfolio that hadn't also been looked at in probably, I would say, 10 years. But she explained that since she had received them as an inheritance, she felt awkward about selling them. We were speaking about all kinds of starting from scratch, basically, and get everything, consolidating all of the different accounts, starting from scratch and creating a portfolio which is relevant to her and what her goals are, what her needs are, helping out her children, supplementing her income, thinking about maybe early retirement, or even once there is retirement, paying for certain things that she likes to do, i.e. travel and other things. She was on, every time I brought it up like 3 different times, there was like a pullback. She like pulled back in her chair. She really, really wasn't able to get over the hurdle of selling the assets that she received as an inheritance. She felt attached to them, and she didn't think that should be sold. She said that, such emotions were not a great way to base her investment decisions, but that she'll wait for them to move back up. Once they move back up to the price that her father paid for them, could be 20 years ago, then she'll decide whether she should sell or not. Believe it or not, this is something that's really, really common that I come across. Children often refuse to make changes to a portfolio that they've inherited. Oftentimes, this is emotionally. Basically, it's almost always emotionally. In other cases, investors will stick with a losing position for years and hope that it's going to return to the price that it was paid for. I've written this a lot of times. I've spoken about this a lot of times. I had a high school teacher. His name was Rabbi Moskowitz. He should be well, live and be well. And he used to say, don't let your emotions get in the way of your thinking process. And that's so true when it comes to receiving an inheritance. It's almost always driven, the children are almost always driven by emotions. They view the money as a connection still to the deceased parent. But they don't look, they tend to look out a little bit, miss out, I would say, on doing things which are proper for them. It's not only also about inheritances, right? Oftentimes around the water cooler at work, we'll get a hot tip, right? And we'll buy the stock. And, I've seen portfolios which are full of water. People drink a lot of water, which means they get a lot of hot tips. And unfortunately, I'll see portfolios that are, I can actually tell you how much water people drink by the amount of lousy stocks they're holding in their portfolio, right? As times go by, you keep on checking, but the stock keeps on dropping. Eventually, you give up water and drink coffee. No, I'm just kidding. But you become living proof of the old adage that patience is a virtue, right? You're just going to hold on. The stock market might be flying up, but you're going to stick to it, right? Because you've got that tip of the water cooler. A lot of us find it psychologically difficult to admit that we picked the wrong stock, we inherited the wrong stock, our parent picked the wrong stock, and we don't want to say we made a mistake. The longer you hold on to that underperformer, though, the more money it's going to cost you. The reason for this is that you could have put your money in something that actually made money, right? So being stubborn and holding on to your losing stock is only going to cause you financial harm. In economics, we have a term for this, and it's called opportunity cost. Right? That's defined as the cost of an alternative that must be forgone in order to pursue a certain action or benefits that could be received from taking an alternative action, right? You could have put money into something that was actually making money, and you refuse stubbornly, right? So that's an opportunity cost. It's one thing to hold on to my broken share, and I got rid of it, right? Even I was able to part with my beloved share. Right? It's another to stubbornly lose money because of your emotional attachment to a stock. Take some time to review your portfolio and reassess the holdings of the positions that you're inheriting, that you're incurring your portfolio, which have been there for a long time, okay? Speak to an advisor. Make sure that your portfolio is up to date based on your goals and your needs, okay? If it isn't, so it's not the end of the world if you actually make a change. Okay, you're allowed to make changes in your investment portfolio. Maybe with your office furniture, you're not, but certainly you can change your investment portfolio. Make sure that it's current to your specific goals and your specific needs, right? Not to your deceased parents. You've been turning into the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. Feel free to email me, Aaron, A-A-R-O-N, at lighthousecapital.co.il. That's Aaron at lighthousecapital.co.il. You can check me out on the web at www.aaronkatzman.com. Be sure to follow me both on Twitter and LinkedIn, and subscribe to our YouTube channel. Thanks so much for tuning in, and we'll speak to you soon.